my name is Jerry Yu, and thank you for watching this YouTube channel. Please make sure to hit the subscription button so you don't miss our next episode. My topic today is to talk about Index Universal Life Insurance Policy and why we refer it as the Swiss Army knife. And we're going to take a step further and show you many ways you can use it before retirement. As a reminder, Index Universal Life Insurance is a type of permanent cash value life insurance that you fund with after-tax premium. It grows tax-deferred, and you can access it as a tax-free income and a tax-free death benefit when you eventually pass away. One of the reasons Index Universal Life is so important right now is because when this video is being shot, we are experiencing the biggest drop in the stock market since June 2020. So keep in mind that Index Universal Life is also principal protected. That means that you have a 0% floor, so you will never suffer loss in the down market. With that said, we're going to talk about the Swiss Army knife of planning. The first stage is protection. Please do not forget that as soon as you pay the first premium, whether it could be $200 a month or $20,000 a month, whenever you pay that first premium, your family is protected. So that's good for income replacement, mortgage protections, and debt replacement. See, if you own a business, it can be used for key person protection or buy-sell agreement. So the first stage of protection is giving you peace of mind that your loved ones are protected financially. The second stage, during this funding period, the deferral time, you have liquidity. People like to think that cash is king. No, cash is not king. Liquidity is king. The reason being is that if you have cash sitting in your checking or savings account or buried in the backyard, it's not earning rate of returns and it's getting eaten up by inflation. So having liquidity, use and control of your money during this deferral phase is also something that's going to give you peace of mind. A lot of time we call it be your own banker strategy. Unlike IRS regulated 401ks or IRAs, where you don't have early access to the money or you'll be penalized. Again, you have the liquidity to use and control of the cash value during the deferral phase. So that can be used as emergency fund, investment opportunities, or college planning, or maybe a real estate bucket, a working capital account, a weddings, just really the list just goes on. And because it's your money and you use it as you see fit. Now we learned that the protection and the liquidity, and let's talk about the distribution phase. So stage 3 of the benefit with an IUL, after you have gotten your death benefit protection up front, you have got access to the cash along the way, and let's say now you are about to retire and you want to start a stream of retirement income. So you can take tax-free income from your Index Universal Life Insurance policy. And please work with your financial advisor on the correct method to do that. But essentially, what you are doing is we're going to borrow from the insurance company and then using our policy as a collateral. And we're not going to get into the loan structure now, but just know that it's a tax-free income. It can be inflation adjusted, and that could go on as long as you are alive. And it can also be used for late-stage income planning. And maybe you can use it for nursing home care or cover long-term care needs in the future. The third stage of benefit in your IUL is TFR, tax-free retirement. Then finally, in stage 4, we have your legacy. Whenever you do pass away, let's say 85 or 90 years old, you have had the protection your entire life, you have had the access to cash, and you have gotten your tax-free retirement income, and then eventually, when you do pass away, there's going to be a death benefit, a residual death benefit that will pass on to your beneficiary or your estate, completely tax-free as well. And obviously, that can be used for final expenses for estate planning. Also, it will give you that peace of mind and dignity when you do pass away. So again, Index Universal Life can be that Swiss Army knife for planning because it's so nimble, it's so dynamic, and it has those 4 stages of benefits. And remember, by holding on to this Swiss Army knife, You have all the control on how you want to use this fantastic tool. So if you see at the bottom here, okay, you know that this is not just a death insurance, right? People think of insurance and it's something that's going to pay my family when I passed away. And we call this life insurance because it has all these living tangible benefits that you can get to enjoy while you are still alive. And then, of course, does have a legacy at the end of life. And I hope you have found these informative and that you understand the 4 stages of Index Universal Life and why we now call IUL the Swiss Army knife of retirement planning. Thank you for watching, and we will see you at our next episode. Thank you.